Hello friends, my name is Arun Tiwari, and in this video I am going to share with you 3 hidden agenda for NRI taxpayers in this budget of 2020 which you might have missed but you must know. So friends, in this video I am going to share with you 3 agendas, and I am also going to share the background story of that agenda, why such provision has been made in budget 2020 and how it's going to impact you as an NRI. Okay, so let's start with agenda number 1. So friends, as you know that for being NRI there is certain condition you have to match, and one of the condition are number of days you stay in India. In section 6(1) of Income Tax Act 1961, it is mentioned for being resident you have to qualify 2 classification. First is you have to stay in India in the previous year for 182 days, and you have to be in India for 365 days out of 4 preceding previous year, that means the years before the previous year. Now just for knowledge of those people who are not from tax background, see, in income tax only there is concept of assessment year and previous year. Previous year is the year when you earn the income, and assessment year is the year when you pay the taxes. Now if I talk about previous year, that means in the year when you are actually earning the money. So in that year you have to stay less than 182 days in India, and apart from that previous preceding years, that is the years which is before the previous year, previous year, you have to be in India less than 365 days. If both this condition matches, you are a non-resident. Like if you are staying less than 182 days in the previous year and less than 365 days in 4 preceding previous year, then you are an NRI, and then your global income will not be taxable in India, your only Indian income will be taxable in India. So I think I made myself clear these points before I go forward and explain you other things. Now what is the background story why this provision is made? So now government has reduced that 182 days to 120 days. So now earlier you can stay in India for approximately 6 months and still you are NRI, your global income is not taxable in India. But now if you want to qualify for a non-resident status, then you have to stay here less than 4 months approximately. So why this provision is made? What was the background story? See friends, lots of NRIs are pretty smart, okay, and what they used to do, although they have significant commercial transaction in India, significant means they might be earning in crores, but just 1 or 2 days they went somewhere on the vacation and they keep their stay in India less than 182 days, and that way they managed to get the NRI status and lots of transactions, lots of income they used to avoid being taxed. So to stop the misuse of that, the government of India has introduced this. Now what is the agenda in that? What is the hidden agenda in that? See, the hidden agenda here is basically they have done a proper study and they found out a lot of people, if we reduce this 182 days, they will be very difficult for them to manage their business in India by staying just 4 months. So naturally either they will choose to deteriorate their income, their business in India, or they will choose to pay taxes. Of course nobody want to kill their business just because they want to pay slightly higher taxes. So keeping that in mind, government of India introduced this, where they reduce the number of days you can stay in India from 182 days to 120 days. So now if you still want to keep the coveted title of non-resident Indian and pay less taxes, you have to cut down your stays in India by less than 120 days. Now you can stay in, I think, Nepal, still it is India and you can manage from them. Just a tip out of there. Now let's move to the next hidden agenda, the agenda number 2. So friends, apart from that, they have also changed the condition for being an ordinary resident taxpayer. Now friends, apart from being resident and non-resident, there are two more, or you can say two subsequent classification of taxpayers. So that is called ordinary resident taxpayer, another is called not ordinary resident taxpayer. Now what is the difference? See, ordinary resident taxpayer means resident, as simple as that, and not ordinary resident means a resident which is resident, which is not even resident, which is not even non-resident. It is in middle of something. So what is the benefit of being NOR? The benefit of being NOR is like, still your global income will not be taxable in that particular year, and you have to pay taxes only whatever income you earn in India. Now this condition arises when you are earlier, you has to be only 7 in the preceding previous year, you have to be in 7 years as a resident to qualify as a NOR. Now this 7-year condition has been increased to 9 year out of 10 year. So out of 10 year, if you are going to be NOR for 9 year, you are going to be NOR, otherwise you are going to be ordinary resident, and your global tax will be taxable in India. So it's a big change because you have to maintain a slightly higher strike rate. So earlier the strike rate was 7 out of 10, now the strike rate will be 9 out of 10. So you have to get almost 90 percentile to qualify as a NOR even now. The same thing, the same hidden agenda here also, they want to tax all those taxpayers, all those NRIs who are misusing, according to the government of India, misusing the concession provided to them. Now how it can be said as a misuse? This is a controversial statement, because if you're giving a provision and somebody is following that provisions, how you can say somebody it is misused, because you only provided that provisions. Now being the part of tax, if somebody is able to manage their taxes staying in India just 6 months, this is definitely, you should say kudos to them, and you should not call them as a traitor, or you should not call them as a misuser of the provisions. So this is two agendas. The agendas are almost same, to get the tax from those taxpayers who are trying to fudge, according to government of India, fudge the number of days of staying in India to get the coveted title of non-resident India. Now for all those viewers who are not non-resident, who are resident, and who might be thinking what is more beneficial to be in India, definitely being non-resident is very much beneficial, because if you are staying in some countries where tax rate is slightly lower, or there is no tax rate, like you are staying in UAE where there is no income tax and you are earning income from there, and you are earning some income from India also, definitely you will not like to pay tax on whatever income you earn in UAE. But if you are a resident, your income all around the world will become taxable in India. Even you have not done anything in India, still the global income become taxable. It will be a nightmare for most of people who have to pay taxes because they stayed a little bit more in India. So that's it. The third and last hidden agenda I'm going to talk about, which is going to hit you slightly more hard, and depends how you're going to take it. But I'm going to ask one question also. So the last changes they have done is, if any NRI or OCI, now first time in history in Income Tax Act they have used the word OCI, Overseas Citizen of India. Earlier it was PIO, Person of Indian Origin. So they have a special card. They are basically holding a foreign citizenship, but because their origin is in India or their parents were in India, government of India has given some special concession to them. They are given a passport like document. On the basis of that, they can stay in India without getting a visa. So like they are, if you say indirect way, they are holding you can say a partial citizenship of India, where they can come and stay in India. Now this third change is going to impact these OCIs, PIO, but not the foreign citizens, who are the foreign citizens who are not people from Indian origin. So what third amendment in the budget 2020 says that if you are an OCI or PIO or a person of Indian origin and you are not paying taxes anywhere, then you are going to pay tax here. Yeah, as simple as that. Now the question is that how government of India are going to find out whether this person is not paying any tax anywhere in the world? Because I think will be very difficult to find the information from other countries where the person is working or staying, whether he is paying taxes there or not. Until unless there is no double tax avoidance agreement, will be slightly difficult to implement. But a good move, a good corner they find out where I think they can tax some people who are according to tax laws who are resident of no country. So they are people without a country. So those people, if they have the Indian origin, PIO card holder, OCI card holder, they will be now taxed in India. So these are three hidden agenda, and all the agenda has a similar track that government of India is focusing on the large base of taxpayer who has somewhere a similarity, that is either they are a non-resident or they have somewhere a linkage from India, either themselves, their parents, their grandparents. So if they are enjoying the benefit, then why should not they pay slightly more taxes? So if you are falling any of this category, be ready for that. If you need any kind of advice, you want to understand that what will be your situation after implementation of these provisions, you can call us, you can send us message on our WhatsApp. We are giving our number here, and we'll be here to help you, to guide you properly, to manage your tax planning accordingly. That's all in this video. I hope you might have got something which you might have not seen anywhere in the media. If you want to know anything else about the NRI taxation, about NRI, how they can manage their taxes in India, how they should you can say propose their taxes so that they should be in the reasonable tax category, you can contact us and we'll be happy to help you. That's it in this video. Have a nice day. Enjoy. Thank you.